All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Monday, everybody. I hope you all had an amazing weekend. Today's July 21st, 2025. And the top story this morning, well, it is the European Union and the United States are scrambling to get a trade deal made. And, well, there's some pretty interesting language being used in these articles this morning. First of all the articles are saying EU scrambles, EU races, as if to imply almost a certain degree of desperation on the part of the EU. And this is interesting. It's in multiple U.S. news outlets. Typically, the language being used has shown reluctance to negotiate, and everybody wants to give the finger to Trump because, well, let's be honest, these media outlets are hardly part of Trump's base. And it's kind of interesting to see such a drastic change in the language this morning, in particular in Bloomberg. One line really stuck out at me in Bloomberg, projecting a lot of weakness on the part of the Europeans. Now, in addition to that, there's also a lot of potentially a lot of frustration on the part of the Europeans. There's an article in Reuters talking about how interlocutors, a word I just struggle to pronounce every time, they're basically saying, depending on who you're negotiating with, you get a totally different story, almost as if, one day they're talking to Hassett and he says a thing. The next day it's Lutnick is in there and he says something else. And then Besson comes in and says something else. It's kind of like a moving goalpost, if you will. So you're seeing a lot of frustration from the Europeans here. And look, this August 1st deadline is looming. We're only a couple of days away from it. The last time we had the Liberation Day thing, you may recall, markets kind of threw a fit. And then, of course, the taco trade came afterwards. We're hoping to avoid that this time around. But either way, it looks like things like auto tariffs and steel tariffs, they're sticking around. And just in case the Europeans can't get a deal made, they are preparing billions of dollars in tariffs on American products. And so that's being viewed as kind of their worst case scenario. Guys, this tariff story is not going away. The market is priced for perfection. It's like we all forgot this trade war was going on. It's still there, lingering in the background. It's the 1,000-pound elephant in the room. And, well, we got a couple of days to get something done here, unless, of course, the taco trade just happens again, which a lot of people think is going to happen, but it might not. And if it doesn't, well, that's going to be messy. Also going on this morning, Stellantis posted a big loss, $2.7 billion for the first half of the year. That's that's after a 5.6 billion euro profit last year. I don't know why the article chose to do dollars and then euros, but I digress. Big problems over at Stellantis. We've seen that all year long here. The industry as a whole is in a lot of trouble. We've done a lot of stories about Nissan over in Japan having a lot of problems recently. Stellantis is holding their beer this morning, or I should say Nissan is holding Stellantis's beer. So this $2.7 billion loss in the first half, the primary driver was a $3.3 billion charge for several canceled car programs, including a lot of money they were spending on hydrogen fuel cells. That money just went up in smoke. Also a $300 million euro hit from tariffs has now been, that's the tally so far. Again, those auto tariffs probably not going away. Big detail here. Second quarter North American sales fell 25% year over year. We're talking about a big three car maker here, a 25% year over year decline in auto sales. Some might call that a crash. That's awful crashy, right? If 10% is a correction, 20% is a bear market, what's a 25% year over year decline in a big three automaker's sales, if not a crash? Also, this new CEO over there, Stellantis, he's got his work cut out for him. I don't know how he's going to right that ship, but he's starting with a pretty low bar at least. We've also got big news from Microsoft this morning. This is kind of interesting. Microsoft, they're reporting what they're calling the zero-day attack. There was some kind of a vulnerability with SharePoint services, and the headline says that they have notified governments and businesses of the attack. Thousands of servers potentially affected. Still in the early opening minutes of this. Its story just broke overnight, so we don't know where this is going to go, but Microsoft stock is down a little bit on this news this morning. Keep an eye on that one. Also, we got election results out of Japan. Prime Minister Ishiba's ruling Liberal Democratic Party got their Liberal Democratic butts kicked in the election over the weekend, although they still hold what's the word I'm looking for? A plurality of seats. You've got multiple parties in Japan, and the Liberal Democratic Party doesn't have a majority, but they do have the highest number of seats of any single party. So we still don't really know what the government is going to look like coming out of this election in Japan. But the Liberal Democratic Party losing power or losing some of its power means a higher likelihood of gridlock, could possibly suggest that we're seeing higher interest rates in the Japanese bond market on the horizon. Guys, look at the calendar. We are almost, just within a few weeks, a year removed from the panic over the yen carry trade last year. You guys may recall that August 5th panic over higher interest rates in Japan and the rapid strengthening of the yen versus the dollar and the unwind of the yen carry trade. Well, this election has the potential to stir that up again. Now, everything is quiet right now because it's a holiday in Japan, so the stock markets and the bond markets are closed, but we did see the yen strengthen overnight. So keep one eye on what's going on in Japan. We've also got earnings this morning from Verizon, earnings from Domino's. Open Door is still running like crazy. That is the newest meme stock. It's up double digits again this morning. It's been up double-digit percentages several days in a row now. The rare earth magnets are finally starting to flow from China. We got an article today that rare earth magnets are up substantially versus a month ago, although still only about half what they were a year ago. So always leave them wanting more, seems to be the Chinese approach to rare earth magnets. And there's an interesting article in Bloomberg about junk bond investors chasing yield by taking on risk. What's the worst thing that could happen? It's only the 2020s. Don't answer that. We got a lot to talk about again this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. Hey, don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button as well so you can come back and have your coffee with the melon heads tomorrow, because we do this every morning. Right now, the S&P 500 is clinging to positive territory, still up by 7 points or 0.11%, although it has given up most of its pre-market gains in just the last few minutes here. The Dow is also still positive, up 69 points or 0.16% higher ahead of the opening bell. And the NASDAQ is also just barely positive, up by 7 points or 0.04% higher ahead of the open. So stocks are up across the board. I use that term lightly. All three indexes are in the green, though. We've got the DXY moving a little bit lower here, 98.09. That's off by 37 basis points this morning or 0.38% lower. And looking over at the bond market, we've got yields are red across the board. Remember, guys, lower yields, that's higher bond prices. So we got people maybe a little bit of a move to safety this morning, just a little bit. 30-year Treasury, 4.936. That's down by 6 basis points and change. The 10-year Treasury, 4.368%. That's also off by 6 points and change. We got the 2-year at 3.850. That's down by 2.5 points. And the 1 month is unchanged at 4.308. Looking over at commodities, we've got metals up again, reinforcing that slight run to safety going on this morning. Although, again, stocks in the green. It's not like we got panic or anything. But spot gold is higher by $37.50. $3,387.86 for spot gold. That's up by 1.12%. Spot silver is higher by 38 cents or about 1% to the upside, $38.57 for silver. I like the shiny. Copper, meanwhile, is up by about 0.3%. Platinum is up another 2.2%, $1,488 for October platinum futures. Palladium is up by about 0.4%, and crude oil is in the red, down about a quarter, $65.80 for September WTI futures. That's off by 0.4%. We've got Bitcoin is a little bit higher this morning, $118,070 as priced on Coinbase. That's higher by about $750 from yesterday. The big story this morning is the altcoins appear to be doing better here. President Trump has signed the Genius Act stablecoin legislation in the law. We're seeing things like XRP and Ethereum are up a few percent this morning. Bitcoin is up as well, but it seems like it's kind of an altcoin day here. Take away from that what you will. Let's go to the main story here. EU is racing to secure a U.S. trade deal and preparing for worst. This is just this morning in Bloomberg. European Union and U.S. negotiators are heading into another week of intensive talks as they seek to clinch a trade deal by August 1st, when U.S. President Trump has threatened to hit most EU exports with 30% tariffs. Officials in Brussels are prepared to stomach an unbalanced agreement that favors the U.S. if that's what is required to break the impasse before the deadline. Now, that sentence really kind of surprised me this morning. Officials in Brussels prepared to stomach an unbalanced agreement that favors the U.S. if that's what's required to break the impasse. The narrative in the press for the last several months has been the rest of the world planting their feet in the ground and giving the finger to Mr. Orange, saying, nope, go do what you want to do. So that one sentence there, that's kind of the first hint of any kind of desperation outside of the U.S. I'm not sure, maybe I'm reading too much into that, but that sentence really stuck out at me. The two sides have yet to yield a decisive breakthrough, despite an earlier round of negotiations in Washington last week, according to people familiar with the matter. Because of that, the EU is also stepping up preparations to retaliate in a scenario where there is no agreement. EU envoys are set to meet as early as this week to formulate a plan for measures to respond to a possible no deal with Trump, whose tariff negotiating position is seen to have stiffened ahead of the deadline. And we got a little bit more description of that stiffening of tariff positions in this article in Reuters here. EU to ramp up retaliation plans as U.S. tariff deal prospects dim. This one is taking a little bit more of a pessimistic stance. The European Union is exploring a broader set of possible countermeasures against the United States as prospects for an acceptable trade agreement with Washington fade, according to EU diplomats. An increasing number of EU members, including Germany, are now considering using wide-ranging anti-coercion measures, which would let the bloc target U.S. services and other sectors in the absence of a deal, diplomats say. The European Commission, which negotiates trade agreements on behalf of the 27-member bloc, had appeared on course for an agreement in which the EU would still have faced 10% U.S. tariffs on most of its exports, with some concessions. Such hopes now seem dashed after President Trump's threat to impose a 30% tariff by August 1st, and following talks between EU Trade Commissioner Marko Sefcovic and U.S. counterparts in Washington last week. Sefcovic, who has said a 30% tariff would practically prohibit transatlantic trade, delivered a sober report on the current state of play to EU envoys on Friday, diplomats told Reuters. U.S. counterparts had come up with diverging solutions during his meetings, including a baseline rate that could be well above 10%, the EU diplomats added. Each interlocutor seemed to have different ideas. No one can tell what would actually fly with Trump, one diplomat said. Prospects of easing or removing 50% U.S. tariffs on steel and aluminum and 25% on cars and car parts appear limited. Washington has rejected the EU's demand for a standstill arrangement whereby no further tariffs would be imposed after a deal is struck. The rationale, according to diplomats, is that Trump's hands cannot be tied on national security, the basis of Section 232 trade investigations into pharmaceuticals, semiconductors, and timber. Accordingly, the mood has pivoted among EU countries. EU diplomats say they are more ready to react, even though a negotiated solution is their preferred option. So take these two articles in totality, if you will. Not very encouraging. It looks like if there's any deal, it's going to lean favorable to the U.S., but right now the Trump administration seems to be pushing their luck a little bit, and if they push too much, the Europeans may say, F you, here's your retaliation, go ahead with your 30% tariffs, and I think we can all agree that would be the worst case scenario for, well, just about anybody, especially the stock market and the bond market. 30% tariffs, as this EU delegate mentioned, it would effectively be a trade embargo. So we'll see where that one goes. We've got, about 10 days left before that August 1st deadline. Stellantis, meanwhile, expects $2.7 billion first half loss as restructuring costs and U.S. tariffs bite. So this is a story that's probably going to be front and center in those European trade negotiations because those auto tariffs are taking a chunk out of Stellantis this morning, although it's not the biggest chunk. This is very much a self-inflicted wound. Stellantis reported a preliminary 2.3 billion euro, that's about $2.7 billion, worth of first half loss as it faces the dual challenge of revamping its product ranges in Europe and the United States while also dealing with the impact of President Trump's tariffs on imports of vehicles and auto parts. Stellantis said Monday it booked 3.3 billion euros in pre-tax charges for the first half as it canceled vehicle programs, including a hydrogen fuel cell project, while investing more in popular hybrid cars in Europe and large gasoline-powered models in the U.S. The automaker's results were worse than consensus, but we think poor numbers were anticipated, Jefferies analyst Philippe Houquois said in a client note. I don't know if I'm mispronouncing Philippe's name there. Sorry, Phil. Earlier this month, Stellantis unveiled a 17,000 euro hybrid Fiat 500, which the automaker is banking on to revive its ailing production in Italy. Let's scroll down a little bit here. Under Tavares, that's their new CEO, that's their former CEO. Industry experts says Stellantis had priced itself out of the U.S. market and failed to update popular models, leaving the company with vast numbers of unsold cars. Stellantis North American sales fell by 25% year on year in the second quarter, it said on Monday, showing the automaker still had a way to go. By the way, the tariffs, let's find that line there. They did mention 300. Let me find it. I should have had this queued up already. There we go. Stellantis estimates U.S. tariffs cost it 300 million euros in the first half. Now, this is kind of interesting because if you read around in the financial press this morning, every article says tariffs hurt Stellantis, post $3 billion euro loss on U.S. tariffs. Everybody's blaming the tariffs for the losses here. All right. If you look here, Stellantis estimates a 300 million euro hit for the first half for tariffs, but their losses were $2.7 billion. It's a lot more than tariffs going on here. They lost a lot of money because they made a huge bet in hydrogen fuel cells that went nowhere. They lost a ton of money because they made too much investments in electric vehicles, and now they're having to write those down. Yes, tariffs took a big chunk out of Stellantis, but that's about 10% of the loss that they just reported. But, the press has their agenda, and everything has to be sold from a certain perspective. Either way, Stellantis holding up pretty well, all things considered. I mean, it's down a fraction of a percent ahead of the opening bell. Let's refresh this and make sure we got an accurate print. Okay, it's down about 0.5%, $9.14 for U.S. shares of Stellantis. Year to date, this thing is down almost 30%, so a lot of this was probably already priced in. Meanwhile, Microsoft alerts businesses and governments to server software attack. This one is just breaking. Actually, this is from yesterday, but they updated it this morning. I think we're probably going to hear more about this in the weeks ahead. Microsoft has issued an alert about active attacks on server software used by government agencies and businesses to share documents within organizations and recommended security updates that customers should apply immediately. The FBI said on Sunday it is aware of the attacks and is working closely with federal and private sector partners, but offered no other details. In an alert issued Saturday, Microsoft said the vulnerabilities apply only to SharePoint servers used within organizations. It said that SharePoint Online and Microsoft 365, which is in the cloud, was not hit by the attacks. We've been coordinating closely with CISA, DoD, Cyber Defense Command, and key cybersecurity partners globally throughout our response, a Microsoft spokesperson said, adding that the company had issued security updates and urged customers to install them immediately. The Washington Post, which first reported the hacks, said unidentified actors in the past few days had exploited a flaw to launch an attack that targeted U.S. and international agencies and businesses. The hack is known as a zero-day attack because it targeted a previously unknown vulnerability, the newspaper said, quoting experts. Tens of thousands of servers were at risk. In the alert, Microsoft said that a vulnerability allows an authorized attacker to perform spoofing over a network. I don't know what an authorized attacker is. That's kind of interesting, but allows them to spoof a network. It issued recommendations to stop the attackers from exploiting it. In a spoofing attack, an actor can manipulate financial markets or agencies by hiding the actor's identity and appearing to be a trusted person, organization, or website. Earlier, Microsoft said it's working on updates to 2016 and 2019 versions of SharePoint. If customers can't enable recommended malware protection, they should disconnect their servers from the internet until a security update is available. Yikes. So we don't know how widespread this attack is going to be, but they're saying governments and businesses here. So obviously it's a severe attack. Right now, Microsoft stock down about 0.7%. $506.44. So Microsoft is down a little bit here, but it's hardly in free fall. So I guess we'll just have to wait and see on this one. Meanwhile, let's talk about what's going on in Japan. How shockwaves from Japanese elections could reverberate in the U.S. bond market. It's not playing such a big role today because the Japanese markets are closed for a holiday, but we could be talking about this one a lot more later on this week. A rerun of last summer's turmoil where a rise in Japanese yen caused chaos throughout financial markets is threatened by this weekend's Japanese elections, as strategists warned. Last summer, a sudden unwinding of the carry trade in Japanese yen, whereby traders short lower-yielding Japanese currency to fund long positions in higher-yielding instruments elsewhere, caused chaos in financial markets. Volatility spiked and risk assets were liquidated aggressively. The S&P 500 suffered an 8.5% drawdown amid the turbulence, and Bitcoin experienced a 15% one-day collapse. Now, Sunday's election results in the upper house of Japan's parliament threaten to send shockwaves through U.S. bond markets. Once again, cautions Mott Capital management strategist and founder Michael Kramer. He's putting the market on guard that Ishiba's failure to secure a majority in the upper house, meaning he has lost control of both parliamentary chambers, may lead to rising Japanese government bond yields, and this may in turn trigger a sell-off in U.S. Treasuries also. Mounting concerns about fiscal indiscipline have led to rising yields in most major developed government bond markets this year, few more so than Japan's. Fears that Japan may no longer be able to sustain its debt load have sent 30-year JGB yields spiraling from less than 2% in August of last year to 3.07% in Monday trading. Markets were alarmed by Ishiba's promises of more government spending and tax cuts to curry favor with voters as he tried to compete with populist opponents. The alarm has spread to equities too. Goldman Sachs prime brokerage analyst noted that hedge funds sold Japanese equities at the fastest pace in roughly 10 weeks just ahead of Sunday's election. So far in 2025, Japan's benchmark Nikkei 225 index is essentially flat compared to gains in most developed and emerging markets. U.S. Treasuries have been afflicted by similar worries this year, and Kramer warns that if Japanese yields rise further following the election result, either U.S. Treasury rates will increase in tandem or the spread between Treasuries and JGBs will narrow, bringing the yen carry trade back into the spotlight. Kramer is arguing that if U.S. rates don't rise to compete, then people will close their yen shorts and be forced to sell whatever risky positions, frequently U.S. mega-cap stocks, that they have paired against them. So nothing yet. No big fireworks yet. Look at this chart of the USD JPY, the number of yen it takes to make $1, right? It's down here. The yen did strengthen a little bit. It's at 147.62, but well off the lows that we saw during last year's panic. So again, it's a wait and see, but keep an eye on this one, guys. Either way, this is going to wreak havoc in the bond market one way or another. Now, we got a couple of earnings this morning as well. Let's go through these. Verizon beats on revenue and raises profit outlook on tax reform. This one just this morning. Verizon Communications posted second quarter revenue that surpassed analyst estimates and raised its profit outlook, buoyed by wireless price increases and recent tax legislation. Operating revenue was $34.5 billion. That's up 5.2% from a year earlier. The New York-based carrier said in a statement, Wall Street had been expecting 33.7 on average. Wireless service revenue, which excludes device purchases and upgrades, was $20.9 billion, in line with projections. At the same time, the company saw a net loss of 51,000 monthly wireless phone subscribers in the period, while analysts had been expecting a gain of 12,000. Like its peers, Verizon is struggling to woo new customers amid a tight market. The company ended Christmas holiday promotions earlier than AT&T and T-Mobile, leading to a steep drop in subscribers in the first quarter. But Verizon stepped up its deals in the spring, rolling out 3-year price guarantees for its internet, mobile plans, as well as free phone upgrades. It also added free satellite-supported texting services. Verizon has increased monthly rates and fees over the past few years to boost revenue, which has shown sluggish growth in recent years. Verizon right now is up this morning about 3%. It was up 4% and change earlier, trading at $42.04, up by about $1.24 ahead of the open. Domino's also posting okay numbers here. Domino's pizza earnings bring good news and bad news. The stock is jumping. Domino's Pizza's second quarter earnings came in lower than expected, even as the pizza chain delivered strong top-line growth, sending shares up in pre-market trading. For the 3 months ended in June, the pizza chain posted $1.15 billion in total revenue, marking a 4.3% growth from a year ago. As analysts had expected, still diluted earnings declined 5.5% to $3.81 a share, missing Wall Street expectations of $3.95 a share. Domino's revenue growth was driven by strong sales at its thousands of franchise stores around the globe. Same-store sales improved 3.4% and 2.4% in the U.S. and international markets, respectively. It marks a comeback in the U.S. market from a 0.5% year-over-year decline in the first quarter. So Domino's catching a bump this morning. Stock is up 3.4% ahead of the open. Doing all right here. The same-store sales offsetting the slight miss on earnings and revenue. Another one to keep an eye on here, guys. Let's do a refresh because the market just opened. Open Door Technologies is up another 23% here. Guys, this is the new GameStop. You got a hedge fund manager came out and said this thing is a 100-bagger. The shorts are lopsided. There's a squeeze going on. If you look at what this thing has done over just the last couple of days, come on, chart, work for me. Well, okay, the chart doesn't want to play. Anyways, this thing has gone vertical. Just be careful, guys. Open Door Technologies, there's no limit to how high this thing could go when you're involved in a short squeeze. It's got nothing to do with the underlying business fundamentals. It's got everything to do with lopsided traders caught off sides. And so, like we saw with the other meme stocks, this one will probably eventually correct. At what level, who knows? Also, U.S. firms scrambled to secure rare earth magnets as imports from China surged 660%. So we were skeptical earlier this month when these deals were made, and they're saying, okay, sure, we're going to send the magnets. Then there were some stories that U.S. automakers were having a hard time getting their hands on those magnets. Well, it looks like they're finally starting to show up. China's exports of rare earth magnets to the United States in June surged more than 7 times from the prior month as American firms clamor to get a hold of the critical elements following a preliminary Sino-U.S. trade deal. In April, Beijing had placed restrictions on several critical magnets used in advanced tech, such as electric vehicles, wind turbines, and MRI machines, requiring firms to receive licenses for export. The move was seen as retaliation against President Trump's tariffs. Let's see. The U.S. received 353 metric tons of rare earth permanent magnets in June. That's up 660% from the previous month. Data released by China's General Administration of Customs showed, though the exports were about half of that from June of last year. So they are finally flowing, half of what they were last year, but still 7 times what they were last month. So they're getting better. Let's just take a look at this one, guys. This is MP Materials, maybe not pertinent to this specific story, but this is the only U.S. maker of rare earth magnets. These guys run mines and production facilities in the U.S. That stock is down about 1% this morning. Although if you look year to date, the stock is up more than 300% after the Department of Defense took out a big stake. And then last week, Apple did the same thing. Last but not least, I wanted to talk about this one. Junk bond investors pile into the riskiest debt. That's according to Credit Weekly. And you can see Jamie Dimon there, the CEO of JP Morgan. He looks a little bit worried about this risky venture into junk debt. U.S. junk debt investors are piling into the riskiest bonds, even as Jamie Dimon and other prominent market watchers are cautioning that valuations on credit are stretched. Bonds rated in the CCC range have gained 0.75% this month through Thursday, outpacing all other ratings tiers, including investment-grade debt. People are piling into debt from companies that can't pay it back. The highest-rated junk bonds, those in the BB tier, have turned in the worst performance among speculative-grade debt, implying that investors are trading out of the less risky junk bonds and into securities paying the most yield. That's known as yield chasing, when people take on extra risk in order to get that yield. It's a shift from March and April, when investors' fears about U.S. President Trump's trade policy spurred BB bonds to perform the best in the junk space. Now those worries are fading. The stock market is reaching fresh highs, and investors are eager to load up on risk. As investors have become more comfortable, they've begun to reach for risk, said Robert Tipp, chief investment strategist at PGIM Fixed Income, in an interview. So what's the worst thing that could happen? we got the whole trade war thing is going on, and you got worries about Japan. Meanwhile, stocks are at all-time highs again, and junk bond investors are taking on more risk than they've ever taken on. I'm sure that's going to end just fine. And I just want to say thank you very much to Learcy. Learcy, thank you so much for supporting the channel. Thoughts on the YouTube gig after 4 years? Has it been 4 years? Well, okay, it's been 4 years since I started the channel. It's been not quite 3 years since I went out and started doing this full time. My thoughts on it. Number one, I've been very surprised by how much came back. When I first started doing YouTube, I thought it was just going to be me shouting into the ether, and that's it, like one-way communication. I've been really pleasantly surprised by all the relationships that have developed around this, by meeting all these other YouTubers and content creators, as well as you guys and Melonheads, my group in the chat, my group on Patreon, my group on Discord. A lot more information came back than I expected, and that's been a pleasant surprise. You may have noticed it's probably not the most glorious of jobs in the world. I wasn't exactly seduced by the glory of it all. But 4 years later, I can tell you I miss corporate America about as much as I miss, having braces, about as much as I miss staying in the hospital. I do not miss corporate America at all. You know how many meetings I have to sit through and listen to, whatever woke ideology is being pumped by the company, or talk about the latest performance indicators that some new middle manager has totally arbitrarily changed just to make himself look more effective as a leader. I don't have to listen to any of that crap anymore, and that is really nice. So those are pretty much my thoughts. 4 years. I do miss nuclear technology. I did like the work that I was doing. It's just all the corporate muckety mucks. I couldn't stomach that anymore. So thank you so much, Learcy, for supporting the channel. Happy with the transition. Here's to 4 more years. Thank you very much, sir. And thank you, everybody, for having your coffee with the Melonheads. I appreciate that very much. Thank you also to my magnanimous Melonheads on Patreon and YouTube. You guys rock. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the YouTube algorithm. Hi, Mom. Hi, Dad. Love you guys. Till next time, everybody. Live small and dream big.